G'day, fools. I'm Scott Phillips, the Motley Fool's Chief Investment Officer here in Australia, bringing you another in our very popular series called Stocks in Focus, where we take a deep dive on some of the companies you own, you read about, or simply just some of the biggest businesses in the country. They're not always Motley Fool recommendations. Sometimes they are, but this is one that's about you. Our stock of the week is actually literally about the companies we've recommended. This is just the ones that we either hear from you about, you want to find out more about, you own, you talk about, or as I said, are reported in the media. And there is no better person to help me on that journey than today's analyst, Trevor Muchedzi. G'day, Trev. How are you, buddy?
Hi, Scott. Good day. How are you?
I'm very, very well, mate. Now, I should let our viewers know, both you and I have had some internet gremlins today, so we'll do our level best to get through what we can. If there are occasional jumps in the video or the audio, we'll get back to making sure you understand what we're trying to say. If we need to, we'll cut, of course. You may not even notice, hopefully. But if there are, just stick with us. All right, Trevor, let's get on to it, mate. You're going to talk about a business that is one of the poster children for the internet age, at least here in Australia, and that is the company called REA Group, previously known as realestate.com, but of course, it's bigger than that now. It still owns the realestate.com portal, the biggest and best internet stock real estate portal in the country. But it's far more than just that, mate. Give us a bit of a look under the bonnet. Talk to us about the REA Group of today, maybe throw in a bit of yesterday as well. Tell us the REA story.
Well, thank you, Scott. So, as you say, the company is well known for its popular website, which is the rea.ax.com.au platform. And essentially is an online real estate advertising platform. So if you want to sell your house or rent your house or buy a house, there's no other place to go in Australia other than the realestate.com. As you say, the company has expanded quite a bit recently. They now own, I think, about 20 brands in about 6 countries, still in the same space. And they've also expanded into the mortgage brokerage space by acquiring the Mortgage Choice. But as far as people are concerned, the most popular, as I said, is the realestate.com.au website.
Mate, it's been one of those stories when it comes to REA. I've been around long enough, a bit older than you. I've been around long enough to remember the early REA story, the early realestate.com story. It was kind of those guys, car sales, Seek, that kind of proved out the internet idea, at least as far as classifieds went. Internet 1.0, if you like. We do a lot more on it now, including social media and a whole lot of other stuff. But that early time, that was all about kind of proving out the value of online, the so-called network effects that we talk about when we talk about businesses like this. And of course, they took a whole lot of revenue and, unfortunately for them, profit away from the old newspapers. I remember, mate, you won't, but I remember the Saturday Sydney Morning Herald in Sydney. It would have been about an inch thick folded over. There was just ad upon ad upon ad upon ad. Employments, real estate, jobs, cars, as I said, it was all there. And it was really, I mean, that was the so-called rivers of gold for the newspapers. They were the rivers of gold that funded everything else. Now, the newspapers have spent the last 20 years trying to find a way to remain relevant in a new world where they don't own these classifieds platforms. REA has done the reverse and actually proven that out. And those 3 businesses, and REA may be the top dog of those 3, I guess. I'm not sure. But have really kind of been the poster children for not only online, but the very concept of a network effect. Now, maybe we talk about it more these days with social media platforms and other things, but maybe for our viewers, mate, just give them a sense of, when we talk about a network effect, what makes REA so powerful as a business?
Well, Scott, I think you said it quite nicely, because actually I was actually reading the other day, and REA Group was actually almost founded at the same time as Amazon. It's quite unbelievable, right? Around 94 and 95. So they were the pioneers of the Web 1.0, right?
Yeah.
And also another statistics which I found actually quite interesting is, since their IPO, this stock has gone up over 900 times. So they've actually outperformed Amazon, right, since that time until today. But circling back to your question around a network effects, REA is really a classical business of network effects. And what we mean there is that it's a company where, as more people come to the platform, it becomes more and more valuable. So think about it from a real estate point of view, right? They want to list their properties on the platform that has the most eyeballs, right? So REA, I think, if I got my statistics right, about 65% of Australian adults visit that platform every single month. That's around 13 million people or 26 million eyeballs that you're looking at every single month. So if you're a real estate agent, there is no better place to place your property than on their platform. Now, on the other hand, if you are a customer and you're looking to rent or buy or sell your own house, where else do you go? If you're looking to rent, the place where you see the biggest inventory of options again is on the REA platform. Because so you have got two sides, and as more people come to the platform, more real estate agents would like to list their properties there. And as more properties are listed, more people will want to come to that platform. So this is a classical network effect. And to further prove this point, so REA, their platform is almost 3 times in terms of the scale compared to the next competitor, which is Domain. And once you're in such a strong position, it becomes extremely difficult for other people to dislodge you from that position. So it's really a nice business. It's capital light, right? Because once the platform has been built, it's capital light, and it's actually a very, very lucrative and high growth type of a company.
Very nice, mate. Really nice summary. Thank you very much. Let's go then to from the company to the investment case. I dare say the business's network effect might count among the pros, though whether it's worth paying for might count amongst the cons. I don't know yet. You and I haven't pre-discussed this, so I have no idea what you're about to say next. I know the business reasonably well, but you've done the research. And I'm looking forward to what you have to say. So, mate, let's break it down for me. Let's talk about the pros of an investment. So make the bull case. Convince me in the next 3 to 5 minutes. Convince me to buy shares in rea.com. We will come back, realestate.com, I should say. We'll come back to the cons. So it's not just one side of it, but let's just do that pro side of the coin right now. REA Group, I should call it. What are the pros, mate? Why should I buy shares in REA Group come first thing, tomorrow or Monday morning?
Well, I think there are a couple of key factors that are going in their favor. Number one, there is the international expansion. They acquired a company, I think, called Elara in India, which was the leading Indian real estate platform. And India is a country, I think, with something close to 1.2, 1.3 billion people, right? So that market is massive. It's probably 50 or 60 times as bigger as much bigger than Australia. So that's the first thing. They're also making other acquisitions within the Southeast Asian space. So I think there is a massive tailwind. Like to your point, most of these countries, right, they also used to rely on newspapers or other offline channels for people to buy and sell houses or rent houses. But right now, because of the penetration of smartphones and internet connections, I believe that the next 5-10 years, so many people within the Southeast Asia or Asia Pacific region are going to move online. And when it comes to renting or buying houses, they are going to look to do that online. So that's the first thing. And then the second thing is they're also making a strategic acquisition and moving into the mortgage origination. Now, if you think about it, they're looking at the entire end-to-end process to buy a house. So just looking for a house is only one step of the process. You also require a mortgage. You also require, to be able to sign the offer to purchase, right? And then also the sale agreement. So they are integrating, or they want to create a vertically integrated group that caters for the process end to end to acquire a house. So they've acquired Mortgage Choice, which is a company, and then they also acquired another company. I think it's called Sympology. I hope I'm pronouncing their name right. But again, it's in the mortgage origination business. Again, what I like about these businesses is their capital light, right? Because once you set up the platform, people simply come to the platform and they can transact. They won't be issuing the mortgages themselves. They just act as a broker or as a mortgage originator for the banks. So by creating a vertically integrated business, I think they can drive revenue growth and also profitability, because the main reason, because the cost of customer acquisition, right, will remain constant whilst your top line is growing. So that will enable the business to increase profit margins going forward. So I think those are the top 3 reasons I would say you should consider buying the stock.
I like it, mate. It's been a heck of a story. And as you say, that cost of acquisition story that we think about quite a lot is basically, for those who don't know, it's basically the car sales and marketing cost, right? If you're going to get a customer from somewhere, how much does it cost you to grab that customer's attention and try and get them to come and use your service or whatever it is? And as you say, mate, if you're looking on realestate.com every day, week, month for a property, when you eventually find one, you're so familiar with the brand, you're familiar with the site, you've probably seen the fact they offer that mortgage broking or origination service, and you kind of go, well, while I'm here, I might as well do that. And that's effectively free, right? Because they've already acquired the customer. The customer's already been, hopefully finding and buying a property on that platform. So that's done. This is just cream on top, which I really like. I also love the idea of going internationally, mate. That whole idea that, we've seen some businesses, by the way, you and I have chatted about some both on the video and offline about some of the times when you see a business model in America and you say, I've seen that movie before. Here it is in Australia. I know how this plays out. This is almost the next step of that, which is I've seen it here and now it's being played somewhere else. That international expansion, not guaranteed, but if you can kind of work out how to run a great online real estate business here with some cultural changes, of course, but you're a pretty good chance of knowing the key levers to make it work somewhere else. And as you say, with 1.2 billion people in India, that's a big number. So we can assume they're a decent chance of being successful there. All right, that's all the pros, mate. You've sold me. I'm loving it so far. Now try and talk me off. Try and get me to change my mind. Try and get me to sell my real estate or REA.com, REA Group shares. Let me spit that out properly. It's had so many names made over the past few years. I'm struggling to get rid of the old ones. REA Group, of course, it is more than just that website. Talk to me about why I should consider selling my shares in REA Group.
Yes, definitely. I think one big issue right now is around the valuation, right? So the company is trading, if my math is correct, something along 50x price to earnings. All right, so that's 50x price to earnings. That's extremely rich, and it really backs in that whole growth story. So there is a little bit of concern right now around valuation, all right, and the stock has been probably a little bit trading sideways in recent months or so. So that's the one big factor. If you're holding the company, you might start thinking about, maybe I should take some profit, especially probably if you've been holding it for 20 or 30 years, you're probably up 800x or 900x. So you must start thinking about taking some profit off the table. So that's the first thing. The second thing is just looking under the hood a little bit. There are so many other real estate agents that are complaining around the pricing or the charges that they have to pay to list their properties on the platform, on their platforms. I think they're accused of probably price gouging. Some would like to say.
Yes.
Some would like to say. And last time that I checked, actually on the platform, there are various real estate agents that are trying some tricks to redirect traffic away from rea.ax to their website, simply because of the massive charges that they're charging. And then on the other hand, you've got domain, which is the it's effectively a duopoly in the market, but they are pricing it much lower to attract those people or customers that are a little bit price sensitive. So one thing I think about the company is that they should always be, they should keep an eye around the traffic. You don't want to see that traffic growth slowing down, or also you don't want to see real estate agents trying to find a way to list or redirect traffic away from the group. So that's probably one thing that they should consider going forward. But other than that, I really like the company. I really like how it's managed. Growth is strong. In the last quarter, they did 22% organic growth. And then now they're also making some acquisitions. But in terms of investing, probably it's priced just a little bit too much. And if you're an investor, you might be thinking of either selling a little bit, or if you don't own the shares, you might be thinking of just holding off a little bit until the shares come down a bit.
Nice. So a great quality business, I sound from the sound of it, but one that's probably a little bit too expensive for you to buy. Is that kind of the bottom line?
Yeah, it's a wonderful business, Scott. I really like the business. I think this year they are on track for their first ever 1 billion revenue year. All right. So it's a really nice business.
Yeah.
But I think the one of the key issues from an investment perspective is just around valuation. They are quite pricey. I mean, 50x is a little bit pricey for a business. So it's trying to balance those two issues.
I like that, mate. It's one of those things you got to be careful not to be tempted to pay twice for quality, right? The quality of the business is already in the earnings, so you're already getting that when you're paying a price earnings of anything, even 20 times earnings, you're paying for those earnings that are high quality already. Paying more because they're high quality makes no sense because you're already paying a multiple of that. You really want to see in that the PE side you want to see the growth there, right? Every business, no matter how great the quality is, if it's not going to grow, be a really super high. I used to own shares in Coca-Cola Amatil, really high quality business, just couldn't grow because it had saturated the market. So, and I made this mistake. I paid up for quality. I paid twice for quality because I paid for the earnings already getting, plus I paid a high PE for that. Except the growth didn't come, and of course, then I got
Yeah.
it wasn't a pretty sight. So, mate, I like that summary. I like that approach. REA Group, as you say, one of the better businesses on the ASX in my view, but 50 times earnings may be worth giving a bit of a wide berth. And look, maybe go and do something else other than house hunting on the weekend. All right, Trevor, thank you for spending your time with us. Thank you for sharing your thoughts on REA Group. You've done a wonderful job, as always, of outlining the key components of the business, the key pros and cons as an investor. Viewers, I hope you've enjoyed hearing from Trevor. I hope you've learned a few things. I hope you've got a new perspective on REA Group, but also, as we like to do in these videos, also some lessons you can take away for thinking about other businesses. If you're considering a business like Seek or Domain or car sales or any of those others that have those network effects, Trevor's now giving you some clues as to what to look for and how to think about how you might go about valuing and understanding the quality of businesses such as these. Mate, thank you again for spending your time with us. Thank you, viewers, for spending your time with Trevor and I on behalf of Trevor and myself and the whole Motley Fool team. Until next time, Fool on.